I've been trading smart money concept for a very long time now, and I've been getting pretty good results with it. But the moment I discovered this one secret, everything changed. Suddenly my trading started making sense on a completely different level. My entries become more precise. I learned how to scale into multiple positions. I learned how to fully capitalize on a single price swing without unnecessarily moving stop loss, taking partials, breaking, and doing all this break even. And most importantly, I learned how to grow small accounts fast. And this whole concept is actually very simple. In fact, when I explain it to you guys will be like, why didn't I discover this thing since? Because this is just good. This whole concept is what changed the way I look at the entries, execution, and price movement. And in this video, I'm going to be breaking down the entire concept to you guys step by step. I will show you the logic behind it, how I apply it in real market conditions. I will give you real life examples of the trades I called in my private group on my free Telegram channel. You guys are going to see. So this is not me going back and giving you guys hindsight. These are actual setup that I called and I took it. So if this sounds like something you're interested in, please do me a favor and go and smash that like button. And also subscribe to the channel if you're interested in content like this. And let's dive into the video. Now, the whole logic behind this concept is taking nested trade. What do I mean by nested trade? It's basically looking for your entry model. We all have entry model. It can be IC 2022 mentors, it might be structural liquidity and POI, which is what I trade, it might be CROT. So getting that your entry model, using it on the higher time frame, then that will give you the directional bias for your intermediate time frame. Then you look for that same entry model on your intermediate time frame. Now, if you want to go more deeper, you can actually, when price tap into that your POI on the intermediate time frame, you can also look for more for that your entry model on a more lower time frame using a time frame alignment. I will give you guys in a bit. I'm going to give you guys a time frame alignment to go. And I know this is going to be confusing for you guys, but by the time I explain this thing to you guys will, this will make a lot of sense. And I'm going to give you a couple of rules to take note of based on, because I've been working on this thing for a while now, so I've come up with rules. I'm going to give you guys it, so stick around. Right, so what do I mean by this? So basically, we all have entry model. You guys know what to trade. So what I'm trying to do is I'm trying to use my entry model on the higher time frame. Example, let's say this is the daily time frame. So I'll look for my entry model on the daily time frame. When I find out my entry model, this is my entry model. If you guys don't know what is my entry model, it is basically I'm looking for a break of structure, liquidity, and I'll take a trade close a take trade at the POI closest to liquidity. Some of you might be familiar with it, but this is not the whole. I will still explain it to you guys in this video in case you want to trade it. But it doesn't matter the strategy you trade, it works on everyone. But that is a entry model I'll be using to explain this whole logic. Now, I'll be looking for this entry model, structural liquidity, and POI on the higher time frame. Then once I see it, this is how my entry would have been on a normal. My entry would have been something like this, like this. Notice something. This now have shown me three things. It have given me my directional bias, and it have given me a place that price is unlikely to take out. Where is that place? This is my directional bias. This is where price is my draw on liquidity, which is my take profit. And this is where price is unlikely to take out. So knowing this now, I'll now go to the lower time frame. This is my daily time frame. Using my time frame alignment, I'll go to something like the 1 hour time frame. And I'll now look for this same of my entry model. And I'll keep on taking trades till this high gets taken out. In some cases, I can decide to even take my take profit all the way up to this high, and it is valid. So you can see the kind of risk reward you are getting on each of these setup if you do like this, if you do something like this. Or I can decide to just leave it at a realistic take profit at this point. So why is this thing going to work? Obviously it's going to work because of this. All right, so before we continue, I just want to inform you guys about the challenge we started. So we are looking to accumulate 330k in profit capital, starting with a small profit. So this is a challenge I started to help my students build capital. We have been doing this thing since last year. I think the last quarter of last year, November 2025. So this year's own, this badge I've started. This is the May badge. So this is the goal is to scale up to 330k profit capital, starting with the smallest profit, which is a 5k profit. So this is the what are they calling it? The protocol we used or the framework we used before in the past, and it has actually worked. So this is something we have been doing, and if you want to see, you can actually access this. This is our free Telegram channel. You can go and click the pinned comment and you can see the past badge and how it goes. You can, if you click here, you can see that is actually real. These are setups that are actually, this is this thing. If you go to this page, you can see updates on our Profem challenge. This second 5K has been passed. In this one was last year's badge, and we bought the first 5K, passed it, bought another 5K, then passed it, and we bought a 25K, and it was in phase one. This was on November. I posted this thing. So this is an old this thing, so you can see proof of all these things. So for these ones, I think we stopped at we were able to get to the 100K threshold before the badge ran out, right? And there's actually a more recent one. Let me get to that one. Okay, now this is actually a more recent one. This year, first quarter of this year, from January to March, right? So we this is, I said, update on the this in the first 5K has been passed. We started on February actually. This one actually was stressful. The first 5K have been passed, and we can go through it. And these are proof. You guys know my setup. I usually high risk reward 10 hour or 5 hours. So one of my setup can pass a single problem. So you can see it. This is the first 5K report, and I've already passed. This is my result. And if you go through this page, you'll see my student result as well. So that is what my mentorship is offering. My mentorship is more of a personalized coaching. Right? It's not about the way I believe the best way to mentor someone is mentor the person through actual execution. Right. So the way I do, we're going to come up with challenge, and while we are trading the challenge, you're going to be learning my strategy. So it's more of, you know, getting your hands dirty. I don't want to spend time teaching you guys concept. We are going to be doing the challenge, and you're going to be learning the strategy while we are doing it. I think that's, in my opinion, is the best way to mentor people. So if you're interested in it, you can always send me a DM on Telegram. You can also send me a DM on my WhatsApp. All the links is going to be in the description of this video. And so that's it. That's what my mentorship is offering. In some cases, I can decide to even take my take profit all the way up to this high, and it is valid. So you can see the kind of risk reward you are getting on each of these setup if you do like this, if you do something like this, or I can decide to just leave it at a realistic take profit at this point. So why is this thing going to work? Obviously, it's going to work because of this is where price is trading to. So remember, I told you guys my entry model is break of structure, liquidity, and POI. And when I saw this thing, I wait for price to tap into this place. Instead of me taking my entry, I go to the lower time frame and start looking for more structure and liquidity and POI till this high gets taken out. Now notice what we have here. We have a break of structure at this point. Now we have this liquidity. Now we mark out, based on my strategy, my entry model rules, I mark out the POI closest to liquidity. That's how I took this trade. Now the take profit of this trade can be at this high, this place is completely fine, or it can be all the way to this high. And I guarantee you this will always work. Not always. And this will work. Why? Because of, as long as you are correct with this your analysis on the higher time frame, as long as this your analysis on the higher time frame work, this will work. You get the point? So now this next one, I'll keep on looking for that same strategy, which is a break of structure, a break of a key structure. There are minor structure here, but the break of a key structure, then a liquidity, then POI closest to liquidity. Now notice what we do. As price is trading this thing, I come and see a break of structure here. I come and see liquidity at this point. I mark out my POI, take the second trade. Now, as price keep going, I saw a break of structure here. I waited for a liquidity, and this liquidity is closest to the breaker block, but far from this other block, so I cannot take the this thing. What I usually do is sometimes I try to remove breaker block from my strategy, but when I used to trade breaker block, and if you choose to trade breaker block, I'll take the breaker block instead and take this on trade. Now, as price keep on going, what do we have? We have a break of structure here. We had this liquidity here. We take our trade at this POI. I think we missed a trade there. We take our trade at this POI, and this is another trade we would have to take in. Now we keep on looking for more setup until the highs get taken out. So what do we have? We have a break of structure here, and that break of structure. But when we have two break of structure, this one is not serving as our liquidity because there's no liquidity from this place. And as long as this one didn't mitigate the other block, so it can serve as a liquidity. We now take our trade at this point, and I'll take profit at this place. So what do we have here? We have the next break of structure at this point. Then we didn't have a liquidity. And this is why this trade I won't have taken it. I didn't even have a liquidity. I would have set limit order for price to mitigate and continue. And we keep doing this until this high gets taken out. Now just imagine this is a single setup, right? and look at how many setup you have made from it. There are two ways you can be trading it, which is one is the modest way, which is the way that is going to give you the best result, but not the best result. What do I mean by that? It's going to give you the best outcome. You're not going to get stopped at break even, but you're not going to get that fancy high risk reward, which is this way, cutting your risk reward at the normal place. But even though you decide to take this in like this, just notice how many trades you have taken. Let's say you risk, I don't know how much you are trading, but let's say you just risk something like $30, $50, or $10 on this setup. If you have taken this setup from year to year, it's going to give you 4 hours, so it's four times that. But let's say you took this one setup. After you take this one setup, you using the compounding. Okay, I've not taught you guys about the best risk management to grow account, but there's a risk management strategy that I have for that. But so let's say that you use that compounding risk management and put the money, some of the profit to this one. Then when this one is in profit, you allocate the profit to this one. Right there, before you go from this place to this place, that $550, you have flip it to $1,350. That's how you see the post that I made on my Telegram channel. That's how I did it. Setups like this. Just when I get one, as long as this one that I found on my daily time frame work well, the rest is good. So sometimes I tell you guys, you can actually go sinister. You can actually go deeper. This is price is fractal, remember, so it will still work. Now let's say after price tapped into this point now. This is the daily time frame, this is the 1 hour time frame. So let's say after price tapped into this point, you can decide not to take this trade here and do something else. What will you do? You can decide to go to a more lower time frame. Now remember, what have this thing given you? This thing have given you one, your the place you know our price will not take out, which is this low, and then the place that you know is your drawn liquidity, where price is drawing to, which is this high. So you have gotten your drawn liquidity, you have gotten your place where price not do. So what you can do is, instead of you taking this trade, you can still go to the more lower time frame. So remember, we started with the daily time frame, and this is the 1 hour structure. Now on the 5 minutes time frame, you can look for the 5 minute structure and start trading the structure there. If you're okay trading the lower time frame, this thing will now look like something like this. Give me a second, let me draw this up. Now this structure, this is our swing structure from here to this high. We are expecting price to go from here to this up. So now we can keep on looking for our same entry model, which is a break of structure. The first one will be actually a market share shift, right? Break of structure in the opposite direction is a market share shift, but they just call it a break of structure so you don't get confused. But when it's in the opposite direction of the market, is a market share shift. Break of structure, our liquidity, and our POI. So now you see we are now trading the 5 minutes time frame instead. So our entry will now be something like this. Stop loss, if you are trading my strategy, just below the low, not at the low. Now take profit. This is, you can decide to go moderate take profit around this high, the swing high. But normally you should at least target this high, at least for the first trade. Now look how many weeks reward you're already getting. 19 hours. And this high you are targeting is the intermediate time frame drawn liquidity, or the 1 hour time frame drawn liquidity. Remember, you still have another time frame drawn liquidity, which is all the way to this high. So you can see the kind of insane risk reward you're getting. But honestly, I will never do something like this. Even though I'm to leave a runner like this, it's going to be a very small runner. The only way that I can go, the only place I can actually stop at is this place. But so notice what we are doing. We are just using the fractality of price to keep on taking setup at any time frame. Now, and the good part of this thing is that when you get scenarios like this, when time frame aligns, you're going to be getting speed, you're going to be getting displacement in your direction. So let's continue. After we got this break of structure, we are still looking for this high to take, and we are looking for our setup. Look for a break of structure again. After a break of structure, we look for a liquidity that is a discount of the range. This is the range. Just take note of that. Just add that this is actually our range. Since we are taking this as our liquidity, this becomes our range. So we are looking for POI at discount. So this is now our POI, probably this other block, and this will be our second entry. Now the third entry, we are looking for still the same thing, break of structure. After we see this break of structure, we can see this liquidity that is at discount, and we can see this order block. This is our next entry. Okay, now what do we have here? We have a break of structure here as well. We have a liquidity, then we have a POI, which is breaker block. Sometimes I don't trade breaker block because of, I think is other block works best for me. So, but if you're the type of person that trade it well, you can actually, this is a setup for you. Stop loss just below, not at it, just below. Then this is your next entry. So we have a liquidity. So is there any other setup? We have a break of structure. Probably we had a liquidity, but this, and we mark this other block, but it never got retested and this high got taken out. So this is now a missed trade. So now this is it. There's something that I usually add to this, and there's something I also look at. I like to draw my my Fibonacci, my, to mark the premium and discount. So any trade above 50% for bullish scenario, anyone that is at premium, I don't like to take my profit at this high. I like to take it at a realistic take profit, maybe somewhere here or somewhere here. All these ones that are close to 50% or that are high in the range, I like to keep a realistic take profit. Why is that? Because of, in most cases, when price does something like this, price tends to, let's say price is coming up to take this high out. Price is coming up to take this high to make the next break of structure. It is not going to take this high. Most cases, it's not going to take this high cleanly. It's going to trade above. When you trade to something above to premium, it's going to give a deep retracement. Then all these trades that are high up are going to get cleared out before price go to this place. So if you had those active limit order, you will get wiped out at break even or this. And so this is why I like to take it at this end. So enough of the too much talk. Let me show you guys live example of me actually taking this trade. Now, the first example we are going to be exploring is this one. This one is an NZD card. This is the daily time frame. Now, I told you guys the first thing is just what is your entry model. Look for your entry model on higher time frame. Scale down to the lower time frame and look for more of your entry model. Take setup from there. If you want to be a bit more sinister, if you want to go more deep, you can actually go down to a more lower time frame and look for your setup. Now, what is my setup? I told you guys this is what I'm looking for. This is my strategy. My strategy, I'm just looking for break of structure, liquidity, and POI. This is what I'm looking for. And my strategy can come in two form. My entry model actually, and I will take my entry like this. So this is what my entry is. These are my strategies, something like this. I'll take my stop loss just below the low like this. So this is my strategy. So it can come in two forms. Sometimes liquidity gets formed before the break of structure. Sometimes it breaks structure and then the last low that didn't make to get the other block forms the liquidity. Anyhow it comes. But the whole idea is that what I'm going to do is, as price taps into this thing, I'll look for this thing on the daily time frame. And when price taps into this now, I'll go to the 1 hour time frame and start looking for this same setup, but it's going to be smaller structures. That means I'll be taking the minor structures of this main structure and till this space is taken out. Now take note of this time frame alignment. I remember I told you guys, if your higher time frame is the daily time frame, your next lower time frame can be the 1 hour time frame. Yes, these are the ones that work. So take note of this one. Monthly, daily, 1 hour, 5 minutes, 15 seconds. You see I'm scaling down. Weekly, 4 hours, 15 minutes, 1 minute. For okay, daily 60 minutes, 5 minutes, 15 seconds. Also have, so I've recently said all of them. So what I just gave you guys, I want you guys to write it down. That is the step down I'm taking. So whatever time frame you want to choose, let's say you choose to use the monthly time frame. You want to be a long-term swing trader, you look for this type of setup on the monthly time frame, then go to the daily time frame to look for substructure. And let's say that you want to even go deeper. When you see that substructure and that substructure tap into your POI, you can now go to the 1 hour time frame to look for even a more tiny structure. So that's the scaling to take note of. That's the ones I use. Now look at this one setup. What do we have here? I told you guys I'm looking for a break of structure. You have this liquidity and our POI. The same thing with this one of this pattern. So when price tap into this place, this is how my entry would have been, something like this. But instead of me taking this entry like this, I went down to this is daily time frame. So I went down to the 1 hour time frame and I started looking for the same setup till that high is taken out. This high is taken out. So what is that setup? Now take note of that setup. I told you guys I'm looking for a break of structure. We have liquidity and our POI. and all this is a retracement. Now what do we have here? We have a break of structure, liquidity POI. Now this is time when the setup did not give me a full risk reward. This one setup actually hit break even on my end. But I was actually targeting this high as usual. So it's hit break even. So now we keep on notice something. As long as price have not violated this low and this high have not been taken, we keep on looking for more setup. So price was going down, going down, going down. After going down, now price break structure. Give me a break of structure here, liquidity, and then my POI. So I now took this trade all the way up to this place. Now, remember what I told you guys, price is fractal and you can actually go to the lower time frame and start looking for more lower time frame entry. So now let's say that you don't want to trade the 1 minute, 60 minutes time frame, or you want to go and look for more this thing. What you can do is wait for price to tap into this place. When price tap into this, and this is the 60 minutes time frame, you now go to the 5 minutes time frame and look for the same structure, liquidity and POI. Now, this was the main entry, but let's just hide it. So what are we looking for? What do we have here? After price tap into this place, what do we have? We have a break of structure, liquidity. We mark our POI. Look at the level of precision. Just look at the level of precision. Remember, I told you guys this strategy will have huge distance. So what do we have here? We also have a break of structure, liquidity and POI, but price never come back to tap it. When price break the next structure, it broke the first structure, break the second structure, okay, but when it comes and break the third structure, this thing becomes invalid. Or rather, I'm waiting for this thing. I'm waiting for confirmation entry. I'm not going to trade aggressive from here. I told you guys I'm going to give you rules. So these are rules to take note of. And what do we have here? We have a break of structure. We have liquidity at this place, and we have this POI. And these are actually live trades. Some of them is posted in my free Telegram channel. Click the link to go and join it and see it. So where is my take profit going to be? Now there are two take profit level here. This is the 1 hour swing high, and this is the daily swing high. So if you want to be greedy, you can decide to start aiming for the daily swing high, but I will never do something like this because in most cases, look at 100 hour. In most cases, you're not going to get this thing. So now the draw on liquidity on the 1 hour time frame has been hit. So I'm going to this draw on liquidity that got hit on the 1 hour time frame will be on the 5 minutes time frame will actually be a 1 hour time frame break of structure. So I'm done with this time frame. I'll go back to the 1 hour time frame and see something. So what do we have here? Okay, this is an actual a trade that you are looking to take. You can see a break of structure right here. This is an active trade. I'm not, you see, I'm not even shy to post my setup. They works well. What do we have here? POI. So this is actually a trade that I can decide to take. It's valid. It's valid based on my own strategy. Stop loss not at the high, just at the low. Take profit at this high. Now I told you guys something. Remember I told you guys something. This is the range you are working with. This is the on the daily time frame. This is the low that we expect price not to take out, and this is the high we expect price to draw to. So what I like to do is to draw my Fibonacci from the high to the low to know premium and discount. Any trade that is sitting high at premium, I don't want to take huge risks reward. I don't want to start expecting something like this. But any trade that is below, you see all these first few trades, I can actually take to this place. Why is that? Because of if I decide to take this thing like this, price can give me do something like this. Give me my entry, give me something like this. Now price is high at premium. So price tends to do its thing and give you a deep retracement, maybe come to this other block. By doing this thing, it's going to clear all these orders that are sitting above here, are sitting high at premium. This one is going to still be active, but this one will get cleared out. Now, I hope you guys understand. This is actually a live trade that I'm going to even post. So yeah, I hope you guys understand this strategy. I hope you guys like this video as always. So yeah, I'll see you guys around.